Everybody, hey, welcome to this Wednesday, the 4th of September. Hope your week is off to a great start. The markets, well, I can't say they are. We'll talk about that and more when Dave joins us here in just a few seconds. But let's remember that there's so many things in this world that are out of our control. The markets, they're out of our control. Washington, D.C., definitely out of our control. So many things we cannot control. However, you can take control of your investment portfolio by knowing the amount of risk that you have in that portfolio and adjusting it to make sure that it matches where it should be based on your current circumstances, how close you are to retirement, how old you are. All those things play a key role. That's why I developed the core retirement design to help you design that retirement you always dreamed of. Give me a call at 863-382-0037 for our core retirement analysis. Hey, with that, we got Dave coming up next.
Oh, yeah. Oh, yeah. Oh, yeah. Light FM. It's Katrina and her permanent waves there. It's 8:42 now, 18 before 9. Time to check in on your money. One of those days in which I really don't like saying, let's find out what's happening on Wall Street, because yesterday was one of those days where about the only people that made any money were the people that had money in the VIX. The volatility index was up by 11.5%. Everything else fell like a rock. Let's check in with Phillip Statler from Statler Financial Services to see if he's got any sunshine this morning. Phillip, good morning. How are you?
Hey, good morning, Dave. I'm afraid I'm not going to be Mary Sunshine today because right now there's still a significant amount of red ink heading across the board this morning as we head to the open.
Well, poop. Let's set the table and see how bad the red ink was for yesterday. It was ugly. It was butt ugly yesterday. The Dow was down 626 points. That's a full 1.51% yesterday. Standard & Poor's dropped 119.5. That was over 2%. And the NASDAQ pretty much sold everything that wasn't nailed down 577 points. That was down, whoa. I had to focus on that. That's 3.25% down in one day. And there was a bunch of stuff that came down. I mean, Boeing's union declared, authorized to strike, but NVIDIA ended up falling like a rock, down another 10% yesterday. And God love the federal government. About the time things are getting hinky, what does the Justice Department do? They say, I think we're going to investigate NVIDIA for antitrust violations. Thanks, guys. I appreciate it.
Yeah, it doesn't. It doesn't take much sometimes to, especially as high as that stock had gotten. But I will tell you, Dave, it's still. I mean, I'm looking at the 52-week numbers, and Nvidia is still well above, like 3 times, like up 300% from the low it was with the 52 weeks. So I mean, it got down. It was like in the 30s. So yeah.
Yeah, everything being relative. I mean, somebody that bought NVIDIA 5 years ago and none of us knew about them or cared about them, they're still fat and sassy. But, I mean, this is to remind everybody, a company that nobody had ever even heard of 5 years ago. And now we got the federal government saying, they must be doing well. We better get them up on antitrust violations. And, right in the middle of a rather hinky market period anyway. We were talking about it yesterday. It's going to be a touchy week anyway with the unemployment reports coming out. And it doesn't take a lot to scare people. I mentioned that the VIX was up like 11.5% yesterday. And probably we're not going to improve on that a whole heck of a lot today, given what you're telling me about the futures. And in a couple of
not going to get better today. I said it's not going to get any better today, I don't think.
I was afraid of that. A couple of other macro things came out yesterday. Number one, these are things that we normally would blow off, but because we are hinky, it just added to the panic. The ISM Manufacturing Index, again, how they calculate it doesn't matter, but below 50 indicates that our manufacturing capacity is contracting. And with the exception of 1 month since like October of 22, it's been in contraction mode. The report came out yesterday. It inched back forward, but still nowhere near as much as the market wanted, and we're still in contraction mode for manufacturing in this country. That didn't help any. And then you noticed that construction spending was also issued yesterday, and I gather that wasn't great, huh?
No, it wasn't. It was basically the same as last month, down 0.3%. They expected it to be down, but not down that much. They expected it to be down about 0.1%. So again, it looks to me like we did not have any really good news yesterday. And you take that on top of a new month and all some highs that we're sitting on, that it just seemed to be a time that people were taking some profits.
Taking profit is a nice charitable way to say it. You add on to the fact that Costco raised their prices for membership effective yesterday, and absolutely nothing good went on, right?
That's right. It did not look like anything good happened yesterday.
Yeah, if you can't save money at Costco, you're pretty well screwed to begin with anyway. We're going to end up getting some more information today that we can at least hope will give us some good news. The Federal Reserve's Beige Book comes out at 2 this afternoon. That's going to be something that even geeks like us just look at the summary on, but boy, the green eye shade peoples really go crazy over it. And then the job openings number, the JOLTS report, comes out. What's that, at 10 this morning?
Yes, sir. 10 o'clock.
Okay. And we're going to cross our fingers for some good news as far as employment openings are concerned, that will either encourage the Fed to look at 0.5%. That'll make at the very least the equity traders happy, even though you and I may not be sold on the notion. And other than that, we start getting into the ADP report one day late this week because of the holiday on Monday. We get that private sector employment tomorrow. And then on Friday, the legendary and mostly fictitious federal unemployment rate.
Yeah, yep. So it will be, it's a packed full week for sure. And we will end up with, 2 days of employment numbers. And that's going to lead us into the weekend. And that will be, I think that will lead us one way or another on Friday.
Yep, and we'll get it. At the very least, any good news would be nice because we were in really foul humor yesterday. Did anybody have any good news on the reports yesterday, on the quarterlies from the publicly traded companies?
Well, it's good news is good news, right? Except for when you give guidance. So Dick's Sporting Goods, they came in and they really had a good quarter. I mean, they beat substantially at $4.37 a share versus $3.83 that was expected. Revenue was slightly above expectations, so everything looked good for them. They even raised their full year guidance, Dave, on revenue.
Woo!
They just didn't raise it enough. Analysts thought
I can keep saying more. Tough room this year, isn't it?
It is. Analysts thought it should have been more. And so that had them. Let's see if I can get it to pull up here a second. I can't get it to pull. Let's see. Dick's had them. Well, yeah, they're down 0.7% this morning. So even with all that good news, it wasn't enough to put them in the green this morning.
That's almost an NVIDIA type of psychology. Yeah, you've got positive guidance. You beat all the macros on the street, and we're still going to trade you down because you aren't hot enough. In the face of all of the other crud going on, I would think they'd be ecstatic.
Yeah, you would think so. Hey, I want to divert from earnings for just a second because we forgot to talk about mortgages. Yeah. So I saw this come across my header. Mortgage refinance demand is up 94% from where it was a year ago.
That downtick on mortgage rates did have an effect last week. I forgot to check for the MBA index. That's right. It's Wednesday, so I didn't double check that at 7 a.m.
I know that holiday just messes everything up, doesn't it?
Oh, yeah. It feels like Tuesday to me. My brain is in a mess.
So we had Dick's. Then let's move on to a little bit more retail. Dollar Tree. They came in and they had an okay, I'm gonna say okay quarter, but their guidance is just not helping them out any. And their same store sales for this last quarter was about half of what they expected it to be, up 0.7. I think they expected to be up 1.5%. So some issues there for them. I think they missed on revenue. Earnings were okay. They came out and adjusted their 4-year earnings and revenue number, and so they're not. People are not happy about that. They are down. Now they may be the big loser today. I haven't seen anything bigger than this yet. Down 11.2% this morning, Dave.
Crud, that's NVIDIA territory.
Yeah, exactly.
Well, by the way, I heard. By the way, there was a kids' lemonade stand down the road from me. The feds raided them yesterday. They're making too much money. Lord, resetting the table. It was a bloodbath yesterday. There's just no two ways about it. 45 minutes before we open this morning, can we turn any kind of a corner today?
Well, I will have some good news on the commodity side, but at this point, everything is red. Now, I will say that the red has improved since we've been on the air today. The S&P 500 down 0.25%. The Dow Jones Industrials down 0.1%, and the Nasdaq 100 down 0.5%. On the other side of the coin, we got silver up almost 0.6%, gold down a little over 0.1%, and then ready, Dave? Drum roll, please. Crude oil, pro 70, $69.90 a barrel.
Holy crud! Yeah, that's an improvement over my delayed quotes too. I was going to say $70.10 was good news. Under 70.
Under 70, man.
Take that happily. Looking at the overseas markets, the Asian Pacific Rim was mightily unimpressed by us yesterday. Japanese markets were down by 4.25% yesterday. Pretty much the rest of the Asian Rim and Toto was off by over 1%. Interestingly, the mainland Chinese markets, look at this as a zero-sum game. They were off by only about 0.5% yesterday. European theater is off again, following our futures and saying, oh no, 2 days in a row, the overall European index is down a little over 1% halfway through their trading day as well. So we aren't drowning in red ink, but boy, it's up to our nostrils right now worldwide. Somebody gets scared by these facts day by day. They probably need a better plan for their retirement. How do I find you to get the risk out of my plans, Phillip?
Dave, that's why I developed the core retirement design to help people design that retirement they always dreamed of. And we start by looking at the risk that's in the portfolio and making sure that it lines up with the amount of risk you should have in your portfolio. Give us a call at 863-382-0037 to schedule your core retirement analysis. And then join us this weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk, 7:30 a.m. and 95.3 FM.
And back here tomorrow morning, hopefully with some good news, same time on Light FM. I'll see you then, Phillip.
All right, man. You have a great day.
Thank you, sir. It's 105.7 Light FM and Statler Financial Services, Phillip Statler.
I want to thank you for joining us today. Hope things are going well for you. I'll be out tomorrow, but back on Friday. Until then, have a great day, and I'll talk to you then. Bye now.